Welcome back everyone, and we are still in the fourth module. The topic is about income tax schemes, accounting periods, methods, and reporting. This time we're going to discuss the second type of accounting method, the installment and deferred payment method. Under installment method, the gross income is recognized and reported in proportion to the collection from the installment sales. And this method is available to the following taxpayers. 1. Dealers of personal property on the sale of properties they regularly sell. And then 2. Dealers of real properties only if their initial payment does not exceed 25% of the selling price. Number 3. Casual sale of non-dealers in property, real or personal, when their selling price exceeds 1,000 pesos and their initial payment does not exceed 25% of the selling price. Before going on further, let us first unlock these following terms: the initial payment, selling price, and the contract price. The initial payment is defined as the total payments by the buyer in cash or property in the taxable year the sale was made. The term initial payment is broader than down payment. It also includes the installment payments in the year of sale. The selling price means the entire amount for which the buyer is obligated to the seller. It is computed as follows. So cash received and or receivable plus the fair market value of property received or receivable, and then plus mortgage or any indebtedness assumed by the buyer. The total now is the selling price. Next is the contract price. So the contract price is the amount receivable in cash or other property from the buyer. It is usually the selling price in the absence of an agreement whereby the debtor assumes indebtedness on the property. Let's have this illustration. Canlubang Company, a car dealer, sold a machine with a tax basis of 1,200,000 pesos on installment on January 3, 2020. Canlubang received a 200,000 pesos cash down payment and a 1,800,000 pesos promissory note for the balance payable in 6 installments of 300,000 pesos every July 3 and January 3 thereafter. Okay, now we'll try to compute for the gross profit on the sale of the machine. The gross profit is determined by deducting the cost or the tax basis of the machine sold from the selling price. So we'll now determine first how much is the selling price. As we have discussed earlier, the selling price is the total of cash received and or receivable, fair market value of property received or receivable, and mortgage or any indebtedness assumed by the buyer. And so let's try to substitute the equation with the given data in the illustration. Okay, cash received and or receivable. So let's check in the illustration. It says that Canlubang Company received 200,000 cash down payment. So 200,000 cash down payment is a cash received. And then Canlubang Company also received 1,800,000 promissory note for the balance payable. So the 1,800,000 notes receivable is part of the cash receivable. Okay, there is no property received or receivable, and there is no any mortgage or any indebtedness assumed by the buyer. So the selling price is the cash down payment of 200,000 plus the notes receivables of 1,800,000. So the selling price now is 2 million pesos, and then less the tax basis of the machine sold, which is 1,200,000. So the gross profit is 800,000 pesos. If the accrual basis is used, then the entire 800,000 pesos gross profit shall be reported as gross income in the year 2016, which is the year of sale. But kung installment basis, dili nato siya magamit diretso ang installment method. So we need to check if the installment method is available for the taxpayer, is available for Canlubang Company. Okay, Canlubang Company is a dealer of cars. But then, in the illustration, ang iyang gibaligya is a machine. So, clearly, the sale here is a casual sale. So, diri ni siya ma-fall sa number 3. Casual sale of installment method is available to the casual sale of non-dealers in property, real or personal, when their selling price exceeds 1,000 pesos and their initial payment does not exceed 25% of the selling price. So we need to determine first the ratio of initial payment. So the initial payment is the total payments made by the buyer in cash or property in the taxable year the sale was made. So we're going to determine now how much is the total payments made by the buyer within the year of sale. The initial payment is composed of the down payments and then the installment payments made during the year of sale. Okay, we'll determine now how much is the initial payment received by Canlubang Company. So the date of the transaction is on January 3, 2020. So we're going to find out unsa kayo mga payments made during the year 2020. First payment received during the year 2020 is the cash down payment worth 200,000 pesos. And then the first installment payment kay ang iyang ingon ang iyang promissory note is payable in 6 installments of 300,000 pesos every July 3 and January 3 thereafter. So, it means nga pagka July 3, 2020, naghatag na siya siyang first installment nga 300,000 pesos. So, wala na dahil lain kay next payment niya is January 3 pa man. So, the total initial payment is 500,000 pesos. That is 200,000 cash down payment plus the first installment on July 3, 2020 of 300,000 pesos. So let's determine now the ratio of initial payment. So the ratio is computed by dividing the initial payment with the total selling price. So 500,000 pesos divided by 2 million pesos. The ratio of initial payment is 25%. So, nasatisfy niya ang requirement mentioned in number 3. Canlubang Company is allowed to use the installment method since ang selling price sa machine exceeds 1,000 pesos and then apart from that, ang ratio sa iyong initial payment does not exceed 25% of the selling price. Now, we're going to determine next the contract price. So, the contract price is usually the selling price if there is no any mortgage assumption by the buyer. Kung na mortgage assumption, ang mortgage nga gi-assume will be deducted from the selling price to get the contract price. Pero in this case, sa Canlubang Company nga transaction, wala may assumption of mortgage. So, therefore, the contract price is the selling price of 2 million pesos. Next, we're going to determine how much of the gross profit will be recognized as gross income of Canlubang Company. The corresponding income throughout the installment period is computed using the formula collection divided by contract price times the gross profit. So at the date of sale, which is on January 3, 2020, Canlubang Company shall recognize the gross income of 80,000 pesos. So this is determined by dividing the collection, which is the 200,000 pesos cash down payment, with the 2 million pesos contract price and then multiplied by the gross profit of 800,000 pesos. And then in every installment, Canlubang Company will going to recognize gross income of 120,000 pesos. So it is determined by dividing the installment payment of 300,000 pesos and then divided by the contract price of 2 million pesos times the gross profit of 800,000 pesos. Okay, we'll have this another illustration. On January 3, 2020, Tagaytay Incorporated, a real property dealer, sold a lot costing 1,400,000 pesos for 2 million pesos, and then the lot was encumbered by a 1 million peso mortgage which was assumed by the buyer. And then the buyer paid 200,000 down payment, and the balance is due over 4 installments of 200,000 pesos every July 3 and January 3 thereafter. Okay, we'll now compute for the gross profit. So the selling price of 2 million pesos less the tax basis of lots sold 1,400,000 pesos. So the gross profit here is 600,000 pesos. Okay, let's determine now if Tagaytay Incorporated is qualified to use the installment method. Okay, let's check. So Tagaytay Incorporated is a real property dealer. So mabilong ni siya diri sa item number 2. Item number 2 says that the installment method is available to the dealers of real properties only if their initial payment does not exceed 25% of the selling price. So we're now going to compute for the ratio of initial payment to check if Tagaytay Incorporated is really qualified to use the installment method. As we have discussed earlier, the initial payment is determined by totaling all the payments made by the buyer in cash or in property during the year the sale was made. So here in the illustration, so the transaction took place on January 3, 2020. So we're now going to determine unsa kaayo nga payments ang nisulod within the year 2020. So we're going to start with the cash down payment, which took place on the date of the sale, January 3, 2020. That is 200,000 pesos. Another payment made during the year 2020 is the first installment on July 3, 2020, which is the 200,000 pesos. And then there is no further payments within the year. Okay, the next installment would be on January 3, 2021. So therefore, the initial payment is only consist of the cash down payment of 200,000 pesos and the first installment of 200,000 pesos. So the total initial payment is 400,000 pesos. Okay, now we're going to determine the ratio of initial payment. The ratio of initial payment is computed by dividing the initial payment with the selling price. So 400,000 pesos divided by the 2 million pesos. So the ratio of initial payment now is 20%. So this means that Tagaytay Incorporated is qualified to use the installment method since ang iyang ratio of initial payment wala ni exceed og 25%. And then this time, we're going to determine the contract price para ma-determine sad nato later ang gross income in each payment. The contract price is usually the selling price. Pero kung naay mortgage na gi-assume si buyer, that mortgage assumption will be deducted from the selling price to get the contract price. And here in the illustration, naay 1 million pesos mortgage nga gi-assume si buyer. So therefore, the selling price of 2 million pesos will be deducted with the mortgage assumed by the buyer. The amount is 1 million pesos. So therefore, the contract price now is 1 million pesos. And at this point, since we already have the contract price, so we can now proceed in the computation for the gross income. And as we have discussed earlier, the gross income is determined by dividing collection with the contract price and then times the gross profit. Okay, at the date of sale, Tagaytay Incorporated shall recognize the gross income of 120,000. So that is 200,000 pesos cash down payment divided by the contract price of 1 million times the gross profit of 600,000 pesos. And on July 3, 2020, and upon every installment, Tagaytay Incorporated shall also recognize the gross income of 120,000 pesos. So that is 200,000 pesos installment payment divided by the 1 million contract price times the 600,000 pesos gross profit. When the indebtedness assumed by the buyer exceeds the tax basis of the property sold, the excess thereon is an indirect receipt realized by the seller. So this indirect down payment will then be added as part of the contract price and the initial payment. And in connection to that, the contract price will then be computed in this manner. So we have selling price less mortgage assumed by the buyer. The balance is the cash collectible, and then add the excess indebtedness The total is the contract price. The initial payment, on the other hand, shall also be computed as follows. So we have down payment plus the installment in the year of sale, and then plus the excess of mortgage over tax basis. The total is now the initial payment. Okay, let's have this illustration. On July 1, 2020, a taxpayer made a casual sale of property with a tax basis of 1,300,000 pesos for 2 million pesos. The property was subject to a 1,500,000 mortgage, which was agreed to be assumed by the buyer. The buyer paid a 100,000 pesos down payment with a balance due in 2 installments of 200,000 pesos on December 31, 2020 and July 1, 2021. So let's determine first the gross profit on the sale. So we have the selling price is 2 million pesos, and then less the tax basis of the property sold, 1,300,000 pesos. So the gross profit is 700,000 pesos. Next, we're going to determine the initial payment so that we can also determine the ratio of initial payment, and we could check if the taxpayer can use the installment method. Let's determine now how much is the total payments made during the year of sale. So we begin with a down payment of 100,000 pesos, and then plus the first installment on December 31, 2020, 200,000 pesos. And then take note that the property is being mortgaged. Then the mortgage is assumed by the buyer. The amount of the mortgage here is 1,500,000. And then take note that the cost of the property, or the tax basis of the property, is only 1,300,000. So 1,500,000 minus 1,300,000. So there is an excess mortgage of 200,000 pesos. So that will be added as part of the initial payment. So down payment of 100,000 pesos plus the first installment on December 31, 2020, 200,000 pesos, and then plus the excess mortgage of 200,000 pesos. The total initial payment is 500,000 pesos. So now we'll determine the ratio of the initial payment. So the ratio of initial payment is computed by dividing the initial payment with the selling price. So 500,000 divided by 2 million pesos, that is 25%. So exactly 25%. This means that the taxpayer is qualified to use the installment method. So we're now going to determine the contract price and then the gross income afterwards. In this case, we're going to use this formula in determining or in computing for the contract price. The selling price of the property sold is 2 million pesos, and then less the mortgage assumed by the buyer, that is 1,500,000 pesos. So the cash, or the remaining cash collectible, is only 500,000 pesos. And then we're going to add the excess mortgage. So this is the 1,500,000 pesos mortgage assumed by the buyer, and then less the tax basis of the property sold, which is 1,300,000 pesos. So the excess mortgage is 200,000 pesos. So the cash collectible of 500,000 pesos plus the excess mortgage of 200,000 pesos, the total is a contract price of 700,000 pesos. So this time, we're going to determine how much of the gross profit shall be recognized as gross income by the taxpayer. As we have discussed earlier, the gross income is computed by dividing the collection with the contract price and then times the gross profit. So at the date of sale, the taxpayer shall recognize the gross income of 300,000 pesos. So that is the 200,000 down payment plus the 100,000 excess mortgage, divided by the contract price of 700,000 pesos, and then times the gross profit of 700,000 pesos. Then on December 31, 2020, upon the receipt of the first installment, the taxpayer shall recognize the gross income of 200,000 pesos. So that is the 200,000 pesos installment divided by the contract price of 700,000 times the gross profit of 700,000 pesos. And then on July 1, 2021, the last date or the last installment, the taxpayer shall recognize the gross income of 200,000 pesos. So that is 200,000 pesos installment divided by the contract price of 700,000 pesos and then times the 700,000 gross profit. And we will now proceed to the deferred payment method. This method is a variant of the accrual basis and is used in reporting income when a non-interest bearing note is received as consideration in a sale. So here, the gross income is computed based on the present value or the discounted value of a note receivable from the contract. The discount interest on the note is amortized or spread as interest income over the installment term. Okay, let's have this illustration. On December 31, 2019, a taxpayer sold an office building costing 1,400,000 pesos for 2 million pesos. The buyer made 1 million pesos down payment and the balance evidenced by a note and is due in 2 annual installments of 500,000 pesos every December 31, starting December 31, 2020. In this illustration, we cannot use the installment method since the initial payment ratio is already 50%. So that is 1 million pesos down payment. So maura na ang atong component sa initial payment kaya wala na may other payments made during the year of sale. So 1 million pesos down payment divided by the 2 million pesos is 50%. And then take note that the requirement in the installment method is dapat ang iyahang initial payment ratio dili mo exceed og 25%. In this case, we're going to assume that the note mentioned here in the illustration is a non-interest bearing but can be discounted at the local bank for 900,000 pesos. And since this is a non-interest bearing note, so we're going to use the deferred payment method. Under the deferred payment method, the gross income will be computed as follows. In the year 2019, the gross income is computed by deducting the tax basis of the property from the selling price. The selling price of the office building is consist of the cash down payment of 1 million pesos and then the present value of the notes receivable amounting to 900,000 pesos. So 1 million plus 900,000. So the selling price is 1,900,000 pesos. And then less the tax basis of the property is 1,400,000 pesos. So the gross income for the year 2019 is 500,000 pesos. If you guys notice, na difference between the face value of the notes receivable and the present value of the notes receivable. The face value is 1 million pesos and then the present value is 900,000 pesos. So the difference is 100,000 pesos. The difference of 100,000 pesos is known as the discount. And the 100,000 pesos discount is going to be amortized as interest income upon every collection on the balance of the note. So this means that in every installment, we're going to allocate a portion of the discount and report that portion as interest income. So in this illustration, for the year 2020, the interest income will be computed in this manner. So 500,000 pesos installment payment divided by the 1 million pesos note receivable balance times the 100,000 pesos discount. So the answer is the 50,000 pesos interest income. The interest income for the year 2021 would still be 50,000 pesos since the installment payment is of equal payments, nga tag 500,000 pesos. Next accounting method is the percentage of completion method for construction contracts. So under this method, the estimated gross income from the construction is reported based on the percentage of completion of the construction project. There are several methods of estimating project completion in practice, but the output method based on engineering surveys is prescribed by the NIRC. Okay, let's have this illustration. In 2019, Cagayan Construction Company accepted a 5 million pesos fixed price construction contract. The following shows the details of its construction activities. So the construction expenses for the year 2019 is 3 million pesos. And then for the year 2020 is 1,200,000 pesos. And then the engineer's estimate of completion in the year 2019 is 70%. And then in 2020, 100%. Under the percentage of completion method, the gross income on construction is computed as follows. Okay, we'll begin with the determination of the construction revenue. So we'll start with the year 2019. So the contract price is the 5 million pesos fixed price in the construction contract. And then we're going to multiply it by the engineer's estimate of completion. So for the year 2019, the percentage of completion is 70%. So 5 million times 70% is 3,500,000. So that is now the construction revenue. And then from the construction revenue in the year 2019 of 3,500,000 pesos, we're going to deduct the expenses during the year. So for the year 2019, the construction expenses is 3 million pesos. So 3,500,000 construction revenue less the expenses of 3 million pesos. So the construction gross income now for the year 2019 is 500,000 pesos. For the year 2020, the construction revenue is now the whole amount of 5 million pesos. Since the engineer's estimate of completion in the year 2020 is already 100%. And note that getting 5 million pesos is the total contract price. So meaning to say, ang 3,500,000 na construction revenue in the year 2019 is appeal na sa 5 million pesos. So in order to get the specific amount of construction gross income for the year 2020, atong i-deduct ang construction revenue sa 2019. So 5 million pesos minus the 3,500,000 pesos is the 1,500,000 pesos. So this is now the construction revenue for the year 2020. And then we're going to deduct it with the construction expenses of 1,200,000 pesos. So the construction gross income for the year 2020 is 300,000 pesos. Next accounting method that we're going to discuss is the outright method and the spread out method. So these two methods are going to be used when determining for the reportable income from leasehold improvements. So we're going to define first the term leasehold improvements. So leasehold improvements are tangible improvements made by the lessee to the property of the lessor. The improvements will benefit the lessor when the useful life of these improvements extends beyond the lease term. So this benefit is referred to as income from leasehold improvement. Under the Revenue Regulations number 2, the income from leasehold improvements can be reported using either of the following method at the option of the taxpayer. So we have outright method and the spread out method. Okay, to illustrate how these methods are going to be applied, we're going to have this illustration. On January 1, 2020, Anderson leased a vacant lot to Greg under a 20-year lease contract. Greg immediately constructed a building on the lot at a total cost of 4,500,000 pesos. The building has useful life of 30 years. In this illustration, the leasehold improvement here is the building. And this building benefits Anderson, the lessor, as the useful life of the building extends beyond the lease term. Okay, here, ang useful life sa building is 30 years. And then the lease term is 20 years. If Anderson is using the outright method, then I'm going to recognize the entire 4,500,000 pesos fair value of the improvement as gross income upon the completion of the improvement, which is the building, in the year 2020. If Anderson is using the spread out method, then the income from the leasehold improvement is determined as follows. So in this illustration, the leasehold improvement here is the building, the cost of which, or the fair value of which, is 4,500,000 pesos. And then the useful life is 30 years. And out of the 30 years ng useful life sa building, 20 years ana has been used up by the lessee ni Greg. And 10 years na lang ang nahabilin para sa lessor. So now we're going to compute pila na lang ang value sa building after the 20 years. Okay, let's begin with the computation of the annual depreciation. So the term depreciation, as you guys have known in your accounting subject, is a systematic allocation of the depreciable amount of an asset over the useful life. Okay, if you're going to acquire depreciable asset like equipments, machineries, buildings, and the like, you have to allocate an expense portion of its cost since assets like this undergo mga wear and tear. So kung ang cost sa building is 4.5 million, so after 20 years, of course, ang value sa building is no longer 4.5 million. Kaya of course na ay mga wear and tear na. So that's the reason why we're going to compute for the depreciation. The annual depreciation is computed by dividing the cost of the depreciable asset over its useful life. So here in this illustration, the cost of the building is 4,500,000 pesos. So divided by its useful life of 30 years, so the annual depreciation is 150,000 pesos. And then we're going to multiply it with 20 years. So 20 is the term of the lease. So 150,000 times 20 years is 3 million pesos. So this is now the accumulated depreciation. So 4.5 million pesos cost of the building less the accumulated depreciation of 3 million pesos. The difference is 1,500,000 pesos. So this is known as the depreciated value of the building at the termination of the lease. And this 1.5 million is an income of the lessor, who is Anderson. Under the spread out method, this 1,500,000 pesos income shall be spread over 20 years, which is the term of the lease. So therefore, 1,500,000 divided by 20 years is 75,000 pesos. So therefore, Anderson, who is the lessor, shall recognize an annual income of 75,000 pesos from the leasehold improvement from the year 2020 to the year 2039.